All right, ladies and gentlemen, I got your watch list coming into August 5th, 2019, and we have a pivotal week ahead of us. Even though that could have seemed like it was last week, the question is now, where does the market go from here? Does it continue to go down? Are you supposed to buy the dip? What do we do? That is why I want to get you guys ready for the week. Although there is a lot of factors that we could be looking at right now, there is one main thing to watch, which will decide, in my opinion, if the market is going to keep coming down. So we're going to go over that. I'm going to get to that straight away. We're going to briefly touch on earnings because that's something I guess it's easy to ignore now. And that's oftentimes where you find opportunity too, because now the attention is drawn away because of the volatility and what the market's been doing. And you guys could see here, you know, as a refresher coming into the weekend, you can't forget where we came up from. It's easy to kind of get short-term memory a lot of these times. So understand the opportunities on both individual companies and companies even insulated from these effects, and then actually what's going on. And despite having a fairly quiet week, actually, well, the one thing I want to show you guys that has actually been pretty volatile here coming into this weekend. But either way, keep your head on a swivel, be ready to go, be smart, and limit expectations. The less expectations, the days go by faster. And honestly, like we said in the last watch list, it doesn't matter what you think. It doesn't matter what I think. If I'm wrong or right, it is about finding good deals and how we're going to take advantage of that with these trades and these option trades. And then finally, we got your beautiful, beautiful keys for the day, baby. So I hope you guys are ready for this. We're going to get into all of this stuff. You know what you need to do. Make sure you're subscribed. Drop your thumbs up on the video. But the most important thing, you need to post your watch list below. What companies are you looking at? Option trades, post the plays. We're here to source information. And make sure we catch you on stream. We are live Monday through Friday, 30 minutes before open. It's in the description. It's pinned in the comments. Shout out to chat, baby. I hope you guys don't think we're done here and don't think it's finished, man. This is where traders are made or traders fade. The volatility is back. So be prepared. If the scoreboard, if you're down, don't lose hope on that. Don't take yourself out of the game and vice versa. Just because you're winning doesn't mean there can't be a comeback. And if you got a pony last week, you better make sure it's not a goat or a donkey or a mule. And yeah, if you don't know what that means, you should come on stream, baby. But let's get into the keys. So the most important thing, I think, and I'm not telling you the first thing yet. Well, actually, maybe I will. I'm going to get straight to it for you guys. Although we need to talk about the strategy and how to go about this, the thing you need to watch, this one thing will decide if the market continues to go down, in my opinion, the yuan, Chinese currency, whatever you want to call it. You get the idea. But you have to notice here now, and this is the key, it's actually been going up here. This is what I was saying into this weekend right now. It's actually weakening. When you see this chart go up, it's a currency pair. When it goes up, that means the Chinese currency is weakening. And really, the key is it's been here for a while. Anything past 7, and this is the key you need to watch out for. It's one, how does this weaken? How does it respond with the market? If there is any tweets and stuff that come out, we're going to discuss that. But the minute this breaks above 7, for all global currencies, including the dollar, this creates a whole new dynamic. And this could start something that's going to affect the bonds and everything else. But it could get to a domino effect level that we haven't really seen. And again, the last time we've ever approached these levels, it was during, literally, it started back in October, then in November, and then December, all the way up until next year. And then as it weakened, then we got our bounce, and then you saw what happened from there. If this isn't a visual representation of the tensions in the trade war, I really don't know what it is, but this is very, very important. So we saw that last week, and we were seeing it little by little. We saw Trump with the EU and what he was doing on Friday. We were expecting auto tariffs. He did a deal with the beef. I thought that was a reaction to China and kind of a defensive move, but all in all, if this continues to weaken, that is what's going to cause the volatility. And be careful, because sometimes, and this is what I'm saying, just like that TLT play, it's going to be a multi-day approach where even if it weakens, it could weaken and the market could go up. But if this starts to break out above that level, it is going to send a clear signal. So don't sleep on it. Or again, you got to lead the ball or lead the puck, whatever you want to look at it as. So that's the thing. That's the title of the video. Hopefully I didn't make you wait too long. I'm plugging you right away. And now is, how do we play this, and how do we know now when it's weakening? Is this the point to act? Is this the time where we buy the dip? Do we short it? What do you do? What I'm going to be looking for is the range, and I think it is all about the range. It's either we're going to get back to that 293, 290 cuck level, or it's back to the levels even below that, which leads us to like 284 or 285, and it's how it stays in those. But the key is going to be how far we slide or rise in the morning. that is going to give you a good idea. But the most important is which support level is easiest to break. When it starts to, I call it butter. When you see a certain support level set up and it just rips through it like butter, and we could tell very, very easily because we've been in these markets for a long, long time. Like again, like 297. Even if I go back a long, we've watched this day after day, and if you've seen this over the last few times, you've seen how the market kind of holds this level. And even then, let me pull it back even further. Like 297 is one of those levels. Then right here near that 293, 290, and that's where we saw it break down. But then it starts to get back in here, that 280 level to, it's like 284 to it's like 284 to 280ish or 270. And that's what's crazy is that once we start getting in this range, the ranges start to get very, very wide. And again, you could see that kind of here, or what we've even seen in the past. So that's what I'm going to be looking for to see how it's breaking again. It broke through last time. It broke through the first time on the reaction like butter. It slid off even more from here. So again, and it bounced now at that 290 level. We want to see if it kind of stays in here and what it does. But the faster and easier it breaks those levels, that is going to be the key. And again, the range it sets. And now the range is important, one, to determine where we could forecast things are going, but also to find the right option plays to be able to determine, okay, is this in the right range where they fall out the money, or they could be in the money? Is this the proper thing to do? And again, that's important for that TLT play. So pay attention to all that. The next thing is there's going to be more tweets from Trump, and tweets will cause reactions, but don't get too jumpy. You have to wait till actual action or policy is implemented. That is what's needed. Do not get pump fake. And again, this is what we've seen at times like this, because now everybody is so jumpy. If Trump tweets anything, EU, it's like, oh, the market's going to move, and it makes a little small move. Don't get suckered into buying something. Again, let the option prices dictate. But what's going to be more important is equal and opposite reactions. Shout out to boot camp, baby. It's really about interpreting the scope of the news. So again, if you're on stream, we'll have that there if it does come out there. But again, we will also cover that day by day. But we have to see, and I say there's going to be more tweets because, again, we thought he was going to come out with some EU auto tariffs, and he didn't. And then he said EU tariffs are never off the table. He could come back with anything. And again, we still haven't heard anything from China. But again, last time we didn't hear things for a while from them. So that's where it's going to get even interesting coming into here. But watch for real policy or real updates to move. So in that, the one thing to watch, I already gave it to you. Anything above 7 is the start of a currency war. So that is why it gets dangerous. And what I mean currency wars, because those are traditionally viewed to as a race to the bottom, and that's where everybody starts weakening. So again, yes, there's something going on between China and the US, but now we can't forget about Brexit. We can't forget about what's happening to the euro, the pound, and all that stuff. So now there's that domino effect where everybody can now start weakening, and this effect could have a bigger move than we expect. Or it could create something that we haven't really addressed yet as it starts to get worse, because so far both countries and most countries, everybody understands it is in their best interest not to push it to this level. So this is even going to have a big effect on bonds, and what happens with the bond market will let us know for the most part what is going on. But now let's get into the plays, baby. I'm going to start here on this bottom one because it's going to highlight the earnings. We will cover earnings that are important, and I want to see kind of how tomorrow plays out and then how some of these post earnings handle themselves, because again, I'm still a little shaky when it comes to wanting to play these. However, there still could be an opportunity, but we are going to get Roku and Disney this week, and I already have Disney calls. I have one of those call spreads. If you guys didn't see that video we made yesterday it's an advanced small account strategy, and I cover how to do the spreads, even how to do them on Robinhood. You guys should check that out. But I have a Disney call spread. I'm going to see the pricing of the options, and we might make a play on them tomorrow or before the earnings, but I want to watch those. I like Roku as well too, and what I want to check tomorrow morning, if the premiums have dropped, it's finally dropped down a few dollars. But the problem with Roku, it has been pricing in very, very expensive earnings and the contracts. And again, you can do a spread if you want it even till next week out, let's say. But in my mind, it's not even worth it. If you even try to buy this one for $600, $635, and then sell this one at the bid at like $540, you're still spending $75, but then a 107 to 110, it's a $300 profit. I just don't really think it's worth the risk. And then as you start getting really far out the money, I know some of you are going to be tempted to take some of these. If you're in this like dollar range, it's still 137. That's a 30% move on the stock by next week. Or even if you wanted to spend $50 or even $20, that's a 50% move on Roku, and that's just not going to happen. I mean, never say never, but hopefully you guys see. And if you are looking to play earnings plays, don't fall victim. Even if it does, I'm okay. Even if if I missed out on this $28 contract and it went up 50%, I'm cool with that, because if I repeated that action over and over and over again, that's not going to be you'll lose more money. It's just not going to work every time. So just be careful with that. But I am going to still watch them again, just because I'm kind of turned off by them. Doesn't mean I'm not going to look at them. So watch those. The next plays I want to go over, I have a few different ones, kind of some of the bigger names, but Facebook is the first one too. They had the news from last week with the investigation, but now they've been selling off from earnings, and now they're at this crucial support level. And anytime they've been here, they've broke down. But you'll notice anytime they had earnings and come up here, it does kind of look like last earnings. So if there's support in the market, it will either break or fall. And that's usually what happens here, is that now at these levels, it's not uncommon for us to see a gap. But the question is when, not as opposed to what. So I'm going to keep my eye out for there. And again, look at the levels. This is back another important level. You could kind of see where it's at, or just approaching there. So keep your eye out for Facebook. And they were actually kind of decent there on Friday. The next one I want to watch is Apple, because it's a similar situation now. It's back at these levels it's been at. They had a really good earnings, but now it's selling off. They could also be in the volume. You could even see how big the volume was. They could be a victim of any sort of retaliation. And now then this next round of tariffs that Trump has already put on, it's going to start affecting electronics and consumer goods more than it did in the other two rounds. And then that's a big difference, because the first two rounds of the tariffs, they affected intermediary products and capital products. But this is now we're talking consumer products here. And that's where Apple, again, the supply chain could get affected in those other rounds, but now it's going to be kind of full felt. But also, I said this last time and we were yet to see it, I think China is going to, they could still react with Apple. And that's the thing too, coming back to the currency, which I should probably make clear here. Why is this so important? Because now this is the only way China could retaliate. China has already tariffed our goods. And, they've put retaliatory tariffs. They've already maxed out what we buy from them, what they buy from us. But we still buy way more. That's why we could keep upping and upping the amount. They can't add more tariffs when they've literally already are tariffing everything for their consumers. So what are they going to do? It's going to come to the currency, and then now they're going to resort to actions like coming after companies. So that's what I'm watching out for. But even in general with the post earnings, I still have that premium sold. I'm going to keep my eyes out for that. Next one is Nordstrom's, and I still like them, even though they've came down here. We heard the rumor, and the fact that we haven't heard any updates is what I like on it. I averaged down on these on Friday, and again, depending on what they do, I like them. I like these $40 contracts, but now if these 37.50s get cheaper, I like them with September. I like them with time, and I'm going to see here. And again, we've already averaged once now. It could be a few more days. I want to see how it works, but we could let it sit for a while. But I wouldn't forget about this one too soon. So I really, really like the Nordstroms. I'm putting that up there. Amazon now, again, all of tech you're seeing, it's at these crucial levels and ranges. So back around here too, it's the same exact fate as Facebook and all those. So watch those, and we're going to look for cheaper contracts. And then IBM, we made a play on this. We got pump fake, but I really like this one. And actually, it even reminds me IBM and then Intel. But watch IBM over the week. On Friday, they announced that they're changing stuff with their earnings and how they will be reporting their tax rate and all that stuff. So we'll see if it is insulated from anything. But even in general, that could be very, very good as well in either direction. But I like that. And then lastly, FedEx. The transports are still going to do their thing. And usually in times of weakness, they're either going to lead the way or they could be the first to bounce. So watch FedEx. And again, it's at crucial levels too. This is a longer term support. So it's now you could see those other companies, they would usually gap down from there. But now in this instance, it's actually holding. So watch those companies. Those are more of my favorite. We got Disney and Roku. And then Baidu, we still have that play. We got that August 16th one. We grabbed these 101s for 20 cents the other day, or 19 cents, and now they're up at 70. They did almost hit $1 here, but they have earnings, I believe, the week after that. So again, with any of these China tensions, I'm going to watch here. But the thing with Baidu now, this doesn't mean, hey, we like Baidu, I'm already in it. But notice I bought it for 20 cents. What does that mean for you? You wait, because, and this is what I'm saying with Baidu, it's one where when the stock reacts, the contracts get very, very expensive. It's the same thing with Baba. But then the minute the pace slows down, those contracts will just drop off in price very, very soon. So if you see these get cheaper now, you could either grab these ones when if they come back to the price we bought them at, or I would get another week. And that's something I might even look to do is on any of these plays. It's just like last week. We'll see how Monday goes. And if you have any puts or anything like that, if they're up a lot, or if you see the market's not doing anything too crazy, but you want to stay in them, and they expire this week, I would look to sell them out and get one more week, especially if you could cover earnings or anything else along those lines. So watch out for Baidu. I like that one a lot. Another play we made was Walmart. I think I grabbed next week 105s or August 16th on these on the Robinhood. We're going to keep coming after this, but I like how it held up and kind of how it reacted through the day. But again, pulling up the chart, it's operating a little bit different than some of these other value stocks, and I still like the Starbucks, as you can see, but I need them to get at a better price. You can see how McDonald's is and all that, but again, consumer products, China, all that, Walmart is going to be susceptible to all that. And then lastly, as far as company goes, our good old UNH, it's going to hit that again. And now look at, again, the support level in the range it's in. It could go up a lot, but now, as we saw last week, it could do another one of these and stick in a range, and it may, hit that support level, but it might not go up as much as we need. But don't sleep on it. But this is benefiting us because now it's not making those big pops like it was. The contracts are going to get cheaper and cheaper for time, because look at how much, even though it's been moving, it's been staying in here. And the timing of how those moves happen, it's going to make the premiums cheaper. So I'm going to be hunting for plays on those all next week and to see. And again, we just have to determine how the healthcare stocks are going to move. We even saw Cigna, Anthem, and all those take a pretty ugly move on Friday as well too. So just keep your eyes out for those. And lastly, now I want to look at UVXY, GLD, and TLT. I did the call spread on there. You guys saw that one on stream. I bought a September 43 call and sold a 53 call. It was $50 total. I think it's trading around $1 right now. But I like that with time, and I want to see how the UVXY moves in terms of the market. But again, just like that Baidu play, these are now the ETFs. And now a lot of people, this is the play of the month still, TLT. We're still in that. I've made them all free now. I sold half of my contracts at like 40-something cents for the ones, or 30-something cents, I think, for the 50 contracts. I sold half of them. So I spent $250. I sold half of them out for $650. I'm walking away with 200% profit, and I still have 25 contracts for September. We have 2 of the August ones left. But now if this pace starts to change, you wait. These are the ones we're really, really going to snipe and just bop on the head. And I'm really interested in it because, again, all these factors we've talked about, it's going to affect TLT. So guess what? You guys know the play. We've talked about it. The thing that's going to kill you is timing. It is going to be very, very easy to jump back into these too early, and you have not seen an IV theta crush till you've witnessed it on one of these ETF type stocks. So again, I'm telling you now, be prepared, and that means both take your profits, but then it also means don't go back in too soon. And even if you want to go soon, there's nothing wrong. Again, we're not going to have perfect timing. That is how you control it with scaling in. So I want to be hunting for these plays and seeing where they're going, but I'm going to come right back into this. But now the final play, this could be the play for this week. We're going to have to see. I'm not too confident on it, but I do like things about it. It's GLD. It's now finally we might be able to play gold this week, simply because now you see those last 3 days, instead of shooting up like TLT did, it held up here, and it's been very volatile. And as long as it stays up these prices and has trouble breaking out, it's bringing the contract prices down. You see, they're not as expensive, but again, they've already doubled there. So considering the nature, paying double's not too bad. It's better than paying more, but watch the longer terms. I'm going to be keeping my eye out for the longer term ones. And again, it's hard to say which strike right now because I want to see the prices, and they're all up the same ratio. It's just a matter of what you want to spend to get in the money. But now I'm going to be stocking all of these, including TLT, to let the premiums kill themselves, and then we are going to snipe them in and get them at bargain when everybody say, okay, I wanted last week for so much money, but this week I changed my mind. Oh, no, they sell off. We buy it very cheap, bargain. So that is game plan. Hopefully you're patient. Hopefully you control budget, and we do a lot of fun thing. Hopefully you on stream, exciting week, another exciting week after this, another one after that, and even better, another one after that. I'm so excited. I love you all. So grateful for all of you to be witnessing this. So please, don't get too excitement and make a purchase too early. You're going to get you blow up, but maybe not like blow up. You not like blow up I'm used to, but like blow up the account. You don't want to do this. So be very, very smart. So that's pretty much it, ladies and gentlemen. We got to the point. A lot of it is now going to be again responding, but also looking ahead for the future. Those are your plays. It's now your turn. Make sure I get your watch list. Make sure you're there in the morning. Make sure you subscribe, and let's go.